A normal buy-to-let property or a holiday let? Which one gives you the most tax benefits? Well, check out this video as Louise and I go through that very question. So let's move on. So we've got Emma Cutsmore, funny enough. She's back.
Hey, Emma.
With a pre-programmed question this time. So Emma asked us beforehand, general advice to start up a limited company service accommodation business. What expenses can be claimed against AFL? Now, I think I've just covered that off, Emma, in terms of what costs are allowable for limited companies. So I am going to distill that away. Do you want to tackle about the service accommodation business? Because that is your baby, isn't it?
It is. I love service accommodation. So when we talk about service accommodation, I'm referring to it meeting the FHL conditions, furnished holiday let conditions of Help Sheet 253 from HMRC. I know. You already knew that. I know. So Help Sheet 253 is a superb document. Go Google it. It's the HMRC one, HS 253 HMRC. And it gives you all the conditions you need to meet to be classified as a furnished holiday let, whether that be in your personal name or in a limited company or a partnership. The beautiful thing about furnished holiday lets, particularly if they're in your personal name, is it is your get out of jail free card when it comes to Section 24 and mortgage interest. Happy days. You get to treat 100% of your mortgage interest still as a tax deductible expense. Yep, you heard it right. It's still tax deductible so long as you meet all the conditions Help Sheet 253 lays out. The other beautiful thing about furnished holiday lets meeting that condition is that they get lots of other wonderful tax breaks, one of which means that you can actually load some capital items, which Simon told you can't have to help minimize your tax. No. But you can for some for furnished holiday lets. So there's lots of additional expenses that you can suddenly load completely against the profits you're making in a particular tax year. And it will bring down the profit and therefore bring down the tax, whether that be corporation tax because it's in a limited company or personal income tax because it's in your personal names. I shall stop there.
No, that's good insights. I think the other thing to bear in mind is the difference between owning a service accommodation in a personal name versus a limited company, because there are some nuances between those two. The first one I would say is Section 24 mortgage interest relief cap. So in your personal name, you are not allowed to offset all of the mortgage interest costs of a standard residential buy-to-let property in your own name, but you can in a limited company.
You certainly can.
So we have to be mindful of that. But if you have a service accommodation in your own name, the Section 24 does not apply to that type of property, and therefore you can offset 100% of the mortgage interest costs against that type of property.
Only if it meets HS 253 conditions, though, remember.
Which is, again, just as a recap, is 210 days available, 105 days actually let, which gives a problem because if your property is in London,
you can't let it for less than, or rather, you can't let it for more than 90 days on short-term lets. And a short-term let is something other than a 6-month AST, as an example. So
really, if you got a service accommodation, it needs to be outside of London now. Because, the parts of London, I should say.
Or it needs to be part of what's called an averaging election, because if you have other serviced accommodations meeting Help Sheet 253 in your personal name in different parts of the country, and on average, when you add up all the short-term nights, they average out at 105 nights per property, bingo, you can have that relief.
That's a good point. Yeah,
but only for 2 years on the trot.
There are many live events that you can register for free. There are 4 events that's showing: HK to UK to help people move from Hong Kong to the UK, the Property Expert Panel. If you're a property investor and property developer, this will be very useful for you. Tax Q&A, if you want to ask proactive tax questions in regards to structures and how to mitigate tax in the future. And finally, UK tax return Q&A, as it says, to deal with questions in relation to your tax returns before you submit it to HMRC. Don't forget that these events are live and will be shown on YouTube the day after. So why not register today, start saving tax tomorrow.